On April 29th, Jerome Powell walked to a podium for what will almost certainly be the last time as chairman of the Federal Reserve. He had done it 65 times before. The same room, the same cameras, the same cluster of reporters who had spent years trying to decode a single word choice, his prepared remarks, because that word choice could move markets by hundreds of billions of dollars in an afternoon. This time the word choice barely mattered. This time everyone in the room already knew he wasn't coming back. Welcome to the Pulse from 10-Minute Money Mindset. On Friday, Mind Over Money explored the psychology behind financial anxiety. Today we're reporting the story driving that anxiety right now. The most powerful job in American finance is changing hands in 5 days. This is what is actually happening and what it means for your money. Let's get into it. This is the Pulse from 10-Minute Money Mindset. I'm going to tell you exactly what is happening at the Federal Reserve right now, what is coming in the next 5 days, and why it is connected to what you are paying for almost everything in your life that involves borrowing money. Here are the facts. Jerome Powell became Fed chairman in 2018, nominated by Donald Trump during Trump's first term. His term as chair expires on May 15th, 2026, that is this Thursday. This week, the full United States Senate is scheduled to vote on confirming Kevin Warsh as the 17th Federal Reserve chairman in American history. Warsh cleared the Senate Banking Committee on April the 29th, 13 votes to 11, entirely along party lines. The first fully partisan committee vote on a Fed chair nominee in the institution's modern history, according to Senator Elizabeth Warren. If confirmed before May 15th, Warsh is expected to preside over the June 16th meeting as chair. The handover of the most consequential financial job in the world, with roughly 48 hours' notice to markets. To understand why this week matters, you have to understand what the Federal Reserve actually controls. The Fed sets the benchmark interest rate for the United States economy. Right now, that rate sits in a target range of 3.5 to 3.75%. That number is not abstract. It is attached to the interest rate on your credit card, your auto loan, your mortgage. Every month you carry a balance on a variable rate debt. That number is in the room with you. Joseph Yoon, consumer insights analyst at Edmunds, described what it has done to the auto market. Car buyers are in a tough spot right now because they're getting squeezed from both ends. High sticker prices and high interest rates, with neither showing any signs of letting up. Until the rate picture shifts, buyers will keep stretching loan terms to make payments work, which only adds to the total cost of ownership down the road. The average monthly payment on a new car hit $773 in the first quarter of 2026, an all-time high. At the same time, inflation accelerated. March CPI came in at 3.3% year-over-year, up from 2.4% in February. Gasoline surged 21.2% in a single month, driven partly by the conflict in the Middle East. The Fed held rates steady. They have held rates steady for months. The people waiting for relief have been waiting a long time. Rohit Chopra, former director of the Consumer Financial Protection Bureau, put the weight of that waiting in plain language. Americans are dealing with trillions of dollars in credit card, auto, and student loan debt. Higher interest rates are making that more difficult for them on top of everything else. So who is Kevin Warsh and how did we get here? Warsh is 55, a Harvard Law graduate, a former Morgan Stanley investment banker who spent years in M&A before serving on the Fed's Board of Governors from 2006 to 2011. Chester Spatt, a finance professor at Carnegie Mellon, described Warsh's role during the 2008 financial crisis as in some respects the most important governor during the financial crisis, with the exception of Chairman Bernanke. He became Bernanke's direct liaison to Wall Street during the worst weeks of the collapse. After leaving the Fed, Warsh became one of its loudest critics. He called the institution's response to the 2022 inflation spike the biggest policy mistake in 4 decades. He told CNBC the central bank needed regime change. He criticized Powell by name, calling him a failed leader who had chosen inflation over credibility. Now he is the regime change. The path to that confirmation was not straightforward. In January, the Department of Justice opened a criminal investigation into Jerome Powell. Prosecutors arrived unannounced at the Federal Reserve's Washington headquarters. The stated focus was Powell's congressional testimony about cost overruns in a multi-billion-dollar renovation of the Fed's Washington headquarters. Powell called it a politically motivated attempt to pressure the central bank on interest rates. Senator Thom Tillis of North Carolina, a Republican on the Banking Committee, announced he would block any Fed nominee until the investigation was fully resolved. Without Tillis, Republicans lacked the votes to advance Warsh. Then on April 24th, U.S. Attorney Jeanine Pirro announced her office was closing the probe. Tillis reversed course. The Banking Committee voted to advance Warsh. Senator Elizabeth Warren called the sequence an illegal attempt to seize control of the Federal Reserve. She called Warsh Trump's sock puppet and said the committee was advancing the nomination under uniquely dangerous circumstances. Warsh, in his confirmation hearing, responded, "The president never asked me to predetermine, commit, fix, or decide on any interest rate decision in any of our discussions, nor would I ever agree to do so. Monetary policy independence is essential." And then Powell did something that had no precedent in the Federal Reserve's 113-year history. He announced he was staying, not as chair, as a governor. Powell's concurrent term on the Fed's Board of Governors runs through 2028. Outgoing chairs have almost universally resigned when their chairmanship ended. Powell declined. He said the legal pressure campaign had become serious enough that leaving entirely would compromise the institution's independence. My concern is really about the series of legal attacks on the Fed, which threaten our ability to conduct monetary policy without considering political factors, Powell told reporters at his final press conference. "I worry that these attacks are battering the institution." Trump responded on social media saying Jerome "Too Late" Powell wants to stay at the Fed because he can't get a job anywhere else. Nobody wants him. Trump himself had hired Powell in 2017. Here is the part of this story that lives in your bank account. Warsh wants to cut rates. Markets are pricing in roughly a 65% chance of a rate cut at the June meeting. The mortgage industry has cautiously hoped that his nomination signals the beginning of a new direction. But Christopher Hodge, chief U.S. economist at Natixis CIB, told CNN, "Warsh is in the unfortunate position, through no fault of his own, to probably be the least influential Fed chair in a long time. He's going to have a really hard time convincing the other members of the rate-setting committee to cut rates quickly. Because the chair does not decide. The Federal Open Market Committee has 12 members. The chair gets 1 vote. At the April meeting, 4 members dissented, the highest level of internal disagreement since the 1990s. 3 of those 4 objected not to the rate decision itself, but to language suggesting future cuts might come. They wanted the committee to signal even less flexibility than it already had. Odeta Kushi, deputy chief economist at First American Financial, said it plainly: "Leadership changes in 2026 are unlikely to materially alter the Fed's policy direction. Although the chair influences communication and risk framing, policy is ultimately set by a committee where the chair holds just 1 vote. 1 vote. Sean Snaith, director of the University of Central Florida's Institute for Economic Forecasting, described the moment this way: "We're in a kind of suspended animation between Iran and the Fed transition. Here is where things stand today. Jerome Powell chairs the most powerful financial institution in the world for 5 more days. Kevin Warsh is expected to be confirmed this week, becoming the 17th person to hold this job since 1913. Powell will remain on the board of governors, an outgoing chairman seated across the table from his replacement, while the president publicly mocks him on social media. And 12 people, not one, will decide what you pay for your mortgage, your car loan, and your credit card. Not 112. On Friday, Mind Over Money is going to explain why your brain assigned all of that power to a single face. Why you have strong feelings about a man you have never met who runs a system most people cannot describe, in ways that are quietly driving your financial decisions right now. And why that might be the most expensive cognitive habit you have. This is The Pulse. I'm glad you're here.